Hey guys, Crypto Sunday and Big Red, 9% down for the week. Everyone's getting sort of a little bit panicky. I really can't see why if you look at the sort of 2017 bull market. We had 35% moves sort of downwards pretty much all the way up to $20,000 Bitcoin. I think there was five moves of sort of 30 to 35% down. So it does come in bull markets. People getting a little bit panicked. One guy on TikTok said that I should have sold everything last week at sort of $30,000 Bitcoin and waited for 20,000. Sort of saying, 30% more at the top of the market is going to be a lot. But I'm not sure I can really see $20,000. As you can guess, that strategy isn't really for me. If we suddenly broke out from sort of where it is now, say, and you're waiting for $20,000, then yeah, you miss out. And I wouldn't really want to be sort of buying back in, £200,000 at sort of $40,000 Bitcoin, say, if it rose to that. So yeah, I'm long-term holding on. Awful lot of news this week, so let's crack on. We've had sort of quite the grilling of Gary Gensler, the SEC chairman. Congress don't seem to be particularly happy. They've been sort of grilling him quite hard on why they haven't sort of set out rules for what is a security and what is a commodity. The chairman sort of repeatedly asking Gary what is Ethereum, basically, and he just sort of says we take a overall view of the crypto industry, and he sort of said, right, but what is Ethereum? You've said Bitcoin is a commodity, so what is Ethereum? It's the largest one that you haven't sort of said anything about. And again, he just says we look at the whole industry, and he just wasn't having any of it. So I think people are getting a bit frustrated with him. As I understand, the US Senate is Republican majority, so with a Democratic government, the Senate are sort of trying to impose their will, and people sort of calling for him to be sacked. So yeah, bit of a strange turn up. The sort of people thought originally when he came in that he was going to be a huge positive for the industry, sort of taught crypto at MIT. He actually admitted recently, or whether this was true or not, I wonder if he may be sort of fibbing to try and keep his stance, but he said he's actually never owned a single crypto. And they sort of were criticising that, saying, he's teaching crypto and he's never owned a single coin himself. I guess you could, in theory, teach it if you have enough knowledge. But yeah, interesting to sort of see where this goes. So far, they just seem to have been having sort of no rules, essentially, and then when they say people break the existing rules that aren't clear, then they get sued. Whereas, obviously, Congress are saying you need to set out specific rules for crypto so people know where they are. You can't just be sort of in fear all the time and then get sued. So, yeah, see what happens. So this, I think, may be sort of a little bit stretching the truth. Institutional investment coming into staking. This is sort of on quite a small scale. If you dig down, it's compared to the amount that is being sort of withdrawn from ETH. You're talking sort of hundreds of millions, tens of millions being staked. But if this is by sort of institutions, then I guess that is a good thing, and obviously the sort of withdrawing and unstaking won't last forever. So if we can start to get more sort of deposits going in, then that's good. Also noting that not everybody withdrawing is necessarily selling; they just don't want it to be on the staking contract. Could be doing other things with it. Could be sort of buying NFTs, could be putting it on DeFi and sort of various things. They just don't want it on the official staking contract. So the sort of fear over the amount that is being unlocked may, people are sort of assuming that is unlocking to immediately sell, but that doesn't seem to be the case so far. So that's reasonably good news. Bit of sort of positive moves starting to happen for Solana. Helium, the sort of 5G, 4G decentralized mobile network, essentially, has moved to Solana. They were sort of running on their own blockchain, and they were saying it's just not very efficient. It should be far lower transaction fees and everything on Solana. And yeah, the move sort of happened this week, and it's gone reasonably successfully. So they've minted, they apparently operate 1 million hotspots, and they've minted an NFT basically for each of those hotspots using Solana's new compression, NFT compression feature, which makes it sort of very cost effective to mint that many NFTs. On Ethereum, I think this would sort of cost, hundreds of thousands of dollars, if not millions of dollars, which isn't particularly efficient. But this has sort of gone reasonably well. And yeah, Helium operates in 77,000 towns in 192 countries, which is a great project, really. It's making me sort of look twice at Cardano. I'm hoping the Messari report comes out for Solana shortly. They've released their one for Cardano. I haven't sort of had too much of a look into it yet. I was just waiting for the Solana one, and then I can compare. But, I keep sort of saying to people, not really seeing people saying we're moving from Ethereum to Cardano because of this, that, and the other, because it's better for these reasons. Don't really see anything. You just see some projects being built on Cardano for the first time, whereas you're getting this sort of thing, people moving from their own blockchain or sort of Ethereum and other projects. Render is another one. And you had Audius, the streaming platform that I'm in, moved to Solana last year, I believe. And also Power Ledger, I believe, have moved there as well. So, yeah, with Cardano being sort of 50% higher market cap already than Solana, yeah, I'm not all that keen at the moment. This seems like Dyson with death. A sort of ex-Goldman Sachs banker is looking to issue corporate bonds and treasuries, US treasuries, on the blockchain. So with the US sort of not being particularly friendly, I think they're saying they're not starting in US ideally, but they're looking for their first product to be an on-chain version of 1 month US Treasury bills. I would imagine they're going to go after this sort of reasonably hard, but I wouldn't imagine he started the company without looking into how sort of likely this is to go through. So, yeah, see how well he gets on with it. So they sort of think, obviously, if you want to earn a little bit of interest while you're in crypto, you would have to sort of use a fiat off-ramp, get back into US dollars, say, and then buy treasuries on a brokerage or whatever. And then sort of when you want to get back into crypto, sell those, get back into crypto on a fiat on-ramp, which can sort of take a little while, Coinbase or somewhere like that. If you're looking to move quite a bit of money, then you can't always move that very quickly. So they're thinking if you essentially just use a stable coin to buy these treasury bills, then you can get a bit of yield quite easily. And yeah, you don't need to use fiat essentially. While you've sort of got interest rates up at 4-5%, then this can be attractive. But yeah, to me, just seems like sort of dicing with the devil, basically. But we'll see if this can sort of get through unscathed. And then I guess we're into regulation corner. So Abu Dhabi have sort of been trying to get away from just oil money, it seems, from what I've seen. They're looking to have a sort of very light regulation zone in Abu Dhabi for crypto projects to go over there, which I believe some have already been doing. A lot of sort of influencers seem to be operating out of Abu Dhabi at the moment, and yeah, they're looking to sort of have that as one of their attractive features. Spending a lot of the oil money, I guess, on it. I think it said they put $2 billion into supporting Web3 projects, or they've set up a fund at least to do that. Not sure how much of it they've spent so far, but yeah, this does seem sort of interesting from them. I see they've been buying up a lot of gaming companies as well, sort of spending billions with their sort of sovereign wealth fund, buying up various stakes in gaming companies. So yeah, interesting. They're looking to sort of diversify away from just oil as we sort of long-term move away from it. So they're smart guys. You got the EU. We've sort of talked about this before. The markets in crypto assets regulation. This has gone through, I believe, sort of 500 odd people for and sort of 30 something against, if I remember correctly, which was crazy for the EU. I thought they were more sort of fractured than that, and we're going to hold this up. But no, it's gone through. Not coming into effect until mid-2024, which is a little bit disappointing. I suppose they can't just, say, let's go next week. But, yeah, that seems rather a long time. They're saying some companies will need longer to adapt than others. So, fair enough, I guess. Legislation takes a long while. But I guess now people know that it's coming in. There could be sort of bullishness leading up to it and a rise in price. So yeah, that's pretty good. And you've already had sort of exchanges. Bitstamp sort of fairly happy with it. Coinbase have, I believe, already been looking to move. So yeah, they're setting up a European headquarters. I think they said in Paris potentially, and yeah, all looking good. So the EU have sort of said this is a first draft, basically, or a sort of version 1, and they're already looking to version 2, if you like, to be a little bit more comprehensive, go on sort of NFTs and more DeFi stuff. So, yeah, moving quickly. And then, of course, not to be left out, the UK has said they look to have a full sort of set of regulations within the next 12 months. So they're basically sticking two fingers to the EU and sort of saying, now that we've left the EU, we can push on with this in a pragmatic and proportionate manner. The UK's economic secretary to the Treasury. So interesting. And a little selfie with Brian Armstrong, the CEO of Coinbase. So it's forget Paris, or maybe not forget Paris, but certainly come over to the UK. So you've got, us, Europe, Dubai, Singapore, Hong Kong, all sort of wanting to attract crypto, and the US sort of stumbling over their own sort of regulators and sort of various initials, basically. The CFTC want to have a piece of it, and SEC just want to sue everyone, and then sort of the Fed and the Treasury and Congress all sort of not really in agreement. So yeah, US don't really know what they're up to at the moment. So with all that, I'm pretty happy. As I say, you can't sort of get worked up about these 10% drops, 9% drops even. That's just what comes with the territory. If you're sort of too bothered about that, then either I would say you sort of can't handle the risk, or you've got too much on, or you're on leverage. That's why I don't do particularly a lot of leverage. Certainly no sort of Bitcoin or Ethereum leverage as such. I don't mind a bit of the miners, which is leverage in itself, but I'm not getting margin called because it's dropped 10%. I can't be having that. So looking at the specific drops, so Bitcoin has taken quite a hit itself, 8.8% down. Ethereum slightly worse, 10.8%. Solana, unusually for the week, outperforming Bitcoin, only down 8.7%. Cardano down 12.6%. So that had been sort of outperforming Solana quite a bit over the last month, and still is. But yeah, I'm certainly, maybe next week, if the Solana quarterly report comes out, I might do a little comparison of them and Cardano, and yeah, there may even be a switch sort of before the end of next week. So we'll see on that. Chainlink down 11 just on 12%. Audius 11%. XRP down 9.5%. Polygon down 11.5%. And then some sort of smaller movers. Gala down 4.8% and Quant down 4.6%. So not too bad there. Power Ledger had a bit of a pump and a drop back down with this red move everywhere, so that's only down 7%. Basic Attention Token 12, and Internet Computer down 4%. VeChain actually the worst of the bunch, 14%. So sort of expect that from smaller altcoins. So yeah, bit of a hit, but I'm basically back where I was. Well, I think a little above where I was 2 weeks ago. So pretty good, and gives me a little bit more time to top up on CleanSpark potentially. So yeah, we'll see where we go from here, and like and subscribe. See you soon.